Let's head to our first conversation. We'll be looking at the consumer goods analyst at Vetiva expects that the market would see some positive turn as consumer goods sector has turned the corner in 2025 after significant macroeconomic headwinds which impacted growth in 2023 and 2024. The report also notes that tax hikes pre-election cycle, among others, pose risks to the sustained growth in 2026. I have with me Motunrayo Sowunmi, consumer goods analyst at Vetiva Capital Management, who joins me now for this discussion. Thank you so much for joining us. We've seen 2025 reflected a turn in terms of how the consumer goods sector really performed from 2023, 2024, where they saw lows, and then 2025. But let's look at how that 2025 performance has been able to shape how 2026 will look like.
All right, thank you. So one thing we see, just like you said, 2023 and 2024, very challenging years for this sector, given structural reforms that were made. But moving into 2025, we saw inflation moderate, the latest print being 15.15 in December, coming from an all-time high of 34.80 in December 2024. And that has provided some relief in terms of the input costs for manufacturers, which has also led to an increased demand for consumers, translating into gross profit margins, improved gross profit margins for this goods, right? Also, we've seen that FX, which is a huge one in the consumer goods sector, we've seen a lot of more transparency in the FX market, and that has led to an appreciation. For 2025 in particular, we saw that the Naira appreciated by 18%, which is a great one. Yeah. And of course, that helped them because this sector is still dependent on importation. FX, yeah. Also, because of the depreciation of Naira that happened in 2023 and 2024, we saw a lot of them post FX losses. But coming into 2025, we see that they've been able to recover from that because of the appreciation of the Naira.
One thing we also need to note is how solid the sector can be in terms of resilience, and yes, you have to bear in mind that reforms would always come. I mean, we have right in front of us the tax law also coming into effect. But let's look at how FMCGs in this area were able to withstand this pressure and able to work with the flow in terms of adaptation right now. 2023, 2024, where inflations were skyrocketing in terms of the numbers and where they are right now. Talk to us how these players in the sector have been able to, or were able to, redefine how they approach business here in Nigeria.
Okay, so one thing we saw was that there were a lot of business initiatives to ensure that they still maintain profitability. From the top line revenue, we saw that there were some companies who did new product launches, there were some who did product innovation just to ensure that they keep up with consumers' evolving behavior. Also, we saw increased local sourcing, which has helped in terms of providing some relief to their cost items. And that also led to a lot of the profitability we saw. We saw, most of the companies do over 100% in PAT recovering from prior year losses, right? And that has been a major driver too.
One thing I note in your report is where you say that volume would drive revenue. I mean, that's like a twist from the norm that we usually get, not like overly overboard, but talk to us why you feel in terms of volume. Are you looking at customer demand going higher, or you're looking at price elasticity in this case?
Okay, so the reason why, we opted for volume is because due to the inflation that happened in prior years, you realize that most of these firms, there was a lot of price inaction, so they increased their prices just to ensure that they're able to make sales. And coming into 2026 going forward, I mean, as rational consumers that we are, any further price increase is going to cause a negative reaction. So it will be based on how these companies are very strategic to ensure that they are able to come up with ways to increase volume, right? Through, for example, route to market, ensuring that, they increase their route to market sales, also increase brand awareness campaign and product innovations, because consumers' behavior will always change. So if they're able to come up with this to ensure that the volume they're able to increase volume, they will still be able to make good profit. But any further price increase is going to be, personally, I would not even.
I mean, we over the weekend I saw a post on Instagram where someone did a comparison with a shopping list he did in 2020 to last year, and the prices were crazily high. Let me put it in that context. But the point is that let's look at how the manufacturing sector has performed so far. Within that time, within the last 5 to 6 years, we've seen in terms of inflation, in terms of borrowing costs go up and the likes. Let's look at what the next MPC meeting will be. We're seeing rates currently at 27%. Any further hike or any further cut, what do you think, how do you think the sector would react to this? Okay,
so due to the hike we've seen so far, we still see a lot of manufacturers complaining. Why? Because it's high borrowing costs for them, making it difficult for them to keep up. And, you know, some news sometime last year that I saw spoke about how they were opting for, you know, the government to ensure that they reduce interest rate just to make the system better for them. But we all know how CBN is largely driven by data, so their decision will be based on how inflation is going to be. And from what we've seen so far, their outlook for 2026 seems to be positive, with an inflation target about 16.50%. And so we believe that going forward, there would definitely be a bit of, you know, reduction in MPR rate. Why? Because they also want to ensure that the manufacturing sector, which is a vital part of every economy, is able to, you know, perform better, right? So we expect that to happen.
And let's look at, basically, while we wrap this conversation, how you expect the sector to perform this year. We know you've already seen that, I mean, based on what you're saying, that it's turning the tide, but any little shake, it's a volatile sector. But any little shake, I mean, we could see the gains reverse. So what are you looking at in terms of your expectation for the year?
So my expectation for this year, I think this year for them will be a test to how their operations are, because last year we saw a lot of bullish operations because of the macroeconomic environment. But this year will be a test as to, you know, the initiative that they're able to come up with to see if they're able to make profitability. But overall, we believe that this year is still going to be a positive one, because consumer goods, we will always demand, especially for essential goods. Yeah, I mean, the brewery segment might be, they might pose...
faster?
No, because, you know, brewery has to do with majorly festive season, so people go for essential goods better. So definitely we expect that the food and segment industry will do better than the brewery, you know, coming forward. But overall, we expect that, given all macroeconomic indicators are, you know, still stable, and we expect them to do better. But I love how you mentioned, you know, the tax, which is something that concern. People are looking at this year.
Right.
Well, like we've seen, VAT has always existed, but for the companies in particular, one thing I believe is that there were some initiatives as to sugar tax. The sugar tax normally is 10 naira per liter, but there were some policies as to increasing that, which would be a downside for them. Also, because even if they increase that and they are meant to pass it on to consumers, because of what is happening now, they are likely to increase prices.
Well,
so that can be a downside for this sector. But overall, it's going to be a positive one. However, not as bullish as we saw last year.
Well, fingers crossed, we'll see what happens. And then also for the consumers, we wait to see if any price shock would be a determinant to how the sector will perform. Thank you very much. That was Motunrayo Sowunmi, Consumer Goods Analyst at Vetiva Capital.